Welcome to the world of finance and economy, where numbers speak louder than words. Today we're peeling back the layers of a major financial event, the Federal Reserve's cessation of rate hikes. This decision has reverberated through the markets, leading to a noticeable dip in prices and signaling a significant shift in our economic landscape. So brace yourselves as we dive into the heart of the matter. The Federal Reserve, the central banking system of the United States, has made a groundbreaking decision. A decision that has left many economists and financial experts scratching their heads. In a surprising turn of events, the Federal Reserve has decided to end rate hikes. Now, for those who might not be familiar with what rate hikes are, allow me to explain. In simple terms, a rate hike is an increase in the interest rate set by the Federal Reserve, also known as the Fed's benchmark interest rate. This rate influences the borrowing costs for everything from mortgages to student loans, and even credit card rates. So why has the Federal Reserve been using rate hikes? Well, it's a tool used to control inflation and stabilize the economy. When the economy is booming, the Fed raises interest rates to prevent it from overheating, which could lead to inflation. On the other hand, when the economy is sluggish, it lowers interest rates to stimulate growth. But why the sudden stop? The Federal Reserve has been closely monitoring economic indicators, and in light of recent data, they've decided that an end to rate hikes is the best course of action. This decision has been influenced by a range of factors, including slowing economic growth, trade tensions, and a volatile stock market. The decision to halt rate hikes is a significant one. It signals that the Federal Reserve is concerned about the health of the economy. It's a shift from their previous stance and indicates a more cautious approach towards managing the economy. What's more, this decision isn't just significant for the United States. Given the influential role of the U.S. economy on the global stage, this decision could have far-reaching implications for economies around the world. This unexpected move has sent shockwaves through the financial world. And as we move forward, it's going to be fascinating to see how this decision impacts not just the economy, but all of us, from homeowners to students to investors and beyond. Now let's talk about the ripple effects of this decision, starting with prices. Picture this, the Federal Reserve has made a big move. They've ended rate hikes. It's like a giant lever has been pulled and the gears of the economy are shifting. But what does that mean for prices? Well, pull up a chair and let's dive into it. First, let's take a step back and understand the basics. When the Federal Reserve increases rates, it's more expensive to borrow money. Businesses, for instance, may hold off on expansion, or consumers might think twice before making a big purchase. This can create a slowing effect on the economy, and as demand decreases, prices often follow. Now flip that scenario. The Federal Reserve ends rate hikes, meaning it's cheaper to borrow. This can stimulate spending and investment, which in theory should drive up demand and prices. But here's the twist. That's not what's happening. Instead, we're seeing a drop in prices. You might be scratching your head wondering why. Well, it's because other factors are at play. The economy isn't just one big lever, it's more like a complex machine with many moving parts. Things like supply chain disruptions, labor shortages, and market uncertainties can all affect prices. In this case, it seems that these other factors are outweighing the effects of the ended rate hikes. It's like trying to heat up a room with a small heater during a snowstorm. Yes, the heater is working, but the cold from outside is just too overpowering. So, despite the Federal Reserve's decision, we're seeing a fall in prices. It's a clear example of how economic policies don't exist in a vacuum. They interact with a whole host of other factors, creating a ripple effect that can reach as far as your local grocery store or gas station. So, as you can see, the decision has a direct impact on your wallet. But hold on to your hats, folks. This is just the beginning. We're standing at the precipice of a massive pivot, a significant shift that could reshape our economic landscape. The Federal Reserve's decision to end rate hikes is more than just a change in policy. It's a signal of a new direction, a new course being charted. So, what exactly is this massive pivot? It's a transition, a swing from high interest rates, which are often associated with economic stability and slow growth, to low interest rates, which are typically linked to economic stimulus and rapid expansion. It's like switching from a steady, plodding walk to a brisk, energetic run. But what might this pivot look like? Well, imagine a seesaw. On one end, you have high interest rates keeping inflation in check but potentially stifling growth. On the other end, you have low interest rates encouraging investment and spending but potentially fueling inflation. Now imagine the seesaw tilting, swinging towards the low interest end. that's the pivot we're talking about. And how might this pivot affect the economy? It's a bit like pouring fuel on a fire. Lower interest rates could stimulate spending and investment, igniting economic growth. But there's a risk too. If the fire gets too big, too hot, it could lead to inflation, eroding the value of money and potentially causing economic instability. It's a delicate balance, a tightrope walk between growth and stability. But remember, every pivot, every shift, brings with it opportunities as well as challenges. As the economic landscape changes, new pathways open up, new prospects emerge. It's a time of change, of uncertainty, but also a time of potential, of possibility. Yes, we are indeed on the brink of a massive shift. You might be wondering, what does all this mean for me? Well, let's dive into that. The Federal Reserve's decision to end rate hikes, coupled with a decrease in prices and a massive pivot on the horizon, is going to have a ripple effect on your everyday life. This isn't just a headline for economists to mull over, it's a seismic shift that will touch everything from your grocery bills to your retirement plans. In the short term, you might see a decrease in the cost of goods and services. That's because lower interest rates can lead to reduced borrowing costs for businesses, which can then pass on those savings to consumers. So next time you're at the supermarket, you might notice a slight dip in prices. That's the Federal Reserve's decision in action. However, it's not all sunshine and rainbows. Lower interest rates also mean lower returns on savings. So if you've been diligently squirreling away money in a savings account or a CD, you might find that your nest egg isn't growing as quickly as it once did. But don't despair. This new financial landscape also brings with it new opportunities. With lower interest rates, now might be the perfect time to invest in the stock market or real estate. These assets often thrive in a low interest rate environment, offering potentially higher returns than traditional savings accounts. Or, if you're feeling particularly adventurous, you could dip your toes into the world of cryptocurrencies. While they're more volatile than other types of investments, they offer the possibility of high returns. But remember, with great potential reward comes great potential risk. Always do your homework and consult with a financial advisor before making any major investment decisions. And that's the crux of it. In this new financial era, staying informed and proactive is more important than ever. Keep tabs on the latest economic news. Understand how these larger trends can impact your personal finances. And most importantly, don't be afraid to seek out advice or adjust your financial strategy as needed. Remember, knowledge is power. Well, that's all we have time for today. We've dissected the Federal Reserve's decision, its impact on prices, and the massive pivot that lies ahead. Thanks for joining this financial journey. Remember, your likes, shares, and subscriptions fuel our content. Stay sharp, stay smart, and keep an eye on those numbers. Until next time.